SpaceX is officially the largest IPO ever, but the real opportunity may be investing in the broader space ecosystem. So, which ETFs own that? We'll find out on today's program. I'm Ron DeLegge with ETF Guy. Great to catch up with you and see you. Let's begin with a big picture view of the financial markets through the lens of ETFs, and we'll get you caught up on SpaceX as well as all the other good stuff that you need to be aware of. But if we take a look at the year-to-date performance trend since the start of 2026, this is through the market close of June 12th, you can see a couple of marking and remarkable trends here, beginning with this performance gap, this massive performance gap across major asset classes, with the standout being commodities, ticker symbol SDCI, which is ahead by over 22% and continues to outperform stocks, bonds, global real estate, even cryptocurrencies by a wide margin. That, of course, has been due to higher inflation, due to conflict in the Middle East, the run-up in energy prices, gasoline, oil, and so forth. So that's helped the commodities group as a whole. And some of these other areas, for example, Bitcoin, are in a bear market and continue to look for a bottom. And then U.S. stocks continue to perform very strongly. SPY ahead by around 9% since the start of the year. So that's your big picture view. In terms of SDCI, which we've talked about on the program many times, those of you that lack exposure to commodities or maybe underrepresented to commodities, this is what I would consider a worthwhile look, an ETF that gives you that plugged-in exposure. It's not overweighted to any one commodity, so you're getting a nice mix. It is got a tactical approach to commodities, so it's not going to be like some of these old school commodity indexes that are overweighted to certain commodities like energy and underweighted to others. So SDCI, 5-star rated Morningstar ETF, worth a look. And in terms of portfolio context, like you think about building an investment portfolio that's architecturally sound, SDCI is what I would consider a core holding that will complement some of those other major asset classes and ETFs that you may own linked to stocks, bonds, real estate, and the like, and maybe even in cryptos. So in terms of S&P 500 industry sector performance, if we slice up the S&P 500, you come up with 11 industry groups. 7 are up, 4 are down. We've got more up than down, so the uptrend continues in the overall S&P 500. And you take a look at the top 3 leaders: energy, technology, and materials. Those are the winners, and they continue to outperform by a wide margin. And, you know, you think about some of the underperformers, there's 4, and the performance has been on the downside quite modest. So those of you screaming bear market or yelling bear market or warning, you know, we've seen a lot of flashing warning signs. That's fine. You know, there are a lot of warning signs, valuations and other metrics out there, but you got to look at the performance trends. And if you look underneath the hood in terms of industry sector performance, still quite bullish in terms of price action. And prices determine the winners. It's not theories, it's not opinions, it's prices. In terms of energy, I wanted to find a couple of energy ETFs that pay dividends. And these ETFs, AMLP, ENFR, if you watch this channel, we've talked about them quite extensively. Our friends over at SS&C Alps have done a good job in managing these ETFs. And really, AMLP and ENFR are all about energy infrastructure. So, you know, think about things like the pipelines, you know, the transportation of the physical goods and oil and gasoline and all of that stuff. So that's what AMLP and ENFR are focused on, and they pay dividends. And those of you that watch the channel that might be approaching retirement or already in retirement looking for more dividends, here's a couple of interesting ways to do that. AMLP currently has a dividend yield in the vicinity of around 6.5% to 7%. ENFR around 4%. So pretty good dividends. And look at the performance since the start of the year. Both of these ETFs have been keeping up with the energy sector. Now they're trailing a little bit. XLE, which again tracks S&P 500 energy stocks, but energy infrastructure has performed nevertheless quite well. And then when you add in the dividends on top of the returns, you look at your total return, it's a pretty compelling performance, and something that certainly merits a second look, especially those of you, again, that like dividends. Now, let's talk about where that might fit inside your portfolio. Again, those industry sector ETFs, single groups, and more concentrated types of ETFs would fit into your non-core portfolio. That would complement the core. Remember, the non-core portion of your investment portfolio is always earmarked for things that may be more risky, more concentrated in nature. That can include individual stocks along with industry sectors, and things like SpaceX, which we need to talk about. SpaceX only raised $75 billion from its IPO sale, but it set a record in terms of the company's market valuation, which is around $1.7 trillion. And just amazing. Those of you wondering, well, I missed the SpaceX IPO. Well, don't worry, don't panic, because there's plenty of ETFs that are going to own or already own SpaceX. Here's just a couple. NASDAQ 100. You've got the CRISP U.S. Total Stock Market Index, and the ETFs like VTI that track that have SpaceX. Russell U.S. indexes, the Russell 1000, which is a large cap index. And then Russell 3000, which is a broader market index. That's going to all own SpaceX. As far as S&P 500 is concerned, no decisions there just yet, but eventually it will get added. And, the outlier, too, is the Dow Jones 30 or Dow Jones Industrials, which I think, at some point, SpaceX might even get added to that. So that's something that to keep an eye on. Now, in terms of another way to play it, because there's lots of space exploration-focused ETFs, we're going to see more of them. There's also some single stock ETFs linked to SpaceX that are coming. More on that later on, not in this episode. But TEMA ETFs, which was featured on our original series, First Look ETF with the New York Stock Exchange, NASA is the ticker symbol. That's an easy one to remember. And TEMA, Space Innovators ETF, owns 39 stocks in its portfolio, all linked to space exploration. And in that portfolio, you got a lot of other companies besides SpaceX. So again, if you're bullish on this sector, this is a diversified way to play it. And those of you that may have missed the SpaceX IPO, well, here's a way that you can participate in space exploration, the NASA ETF. Now, let's talk about another area that has been an outstanding performer. Semiconductor ETFs are still hot. Now, they have corrected a little bit, which is not to be unexpected, no shock there, right? Because you can't continue to go up without some down. But the trajectory is still up, and some of these ETFs have been great performers. Soxal, which aims for triple daily performance to semiconductor stocks, continues to be a great performer. You can see from this chart, most of the performance is really started just recently. In April is when things began to really take off for semiconductors. And then some of those single stock ETFs linked to Marvell Technology, as along with Intel, have also been great performers. So take a look at those ETFs. We've got the ticker symbols there, MRVU and LINT, LINT. A couple of other areas that merit your attention. Everyone talks about semiconductor stocks, but you know what? AI data centers require massive amounts of electricity, and electricity requires copper. Copper is used in data centers, power transmission, transformers, grid upgrades, cooling systems, just to name a few applications. Copper's been a great performer this year. We've talked about it in our other original series, Metals in Motion with Sprott ETFs. And here's a couple of ETFs that have been great performers. Now, it's been volatile. It's been all over the place, but the trajectory is still up. COPP, C-O-P-P, ahead by over 21% since the start of the year. And then some of these other areas have really cooled off, like uranium, but nevertheless merit your attention. URNM, if you take a look at the 1-year performance, which I didn't chart here, but the 1-year performance, pretty strong for uranium and uranium miners. We are seeing a little bit of a pause, though, and that pause, whenever you see a pause, that may offer an opportunity to add more or to get in if you missed the prior run. And then SETM is another one, which is more of a mashup of different critical materials in the same portfolio. You get a little bit of copper, you get a little bit of lithium, you get a little bit of everything. So SETM is a diversified play on that whole critical materials movement and trend, and it's been a great performance, up over 18% since the start of the year. In terms of the Bloomberg Billionaires Index, as we wind up today's episode, well, no surprises there, especially after that SpaceX IPO. It really increased Elon's margin of winning over the rest of the billionaires by a lot, and he continues to be number one. And then we got a whole bunch of other very wealthy billionaires, and look at this. Where is most of that wealth concentrated? Where was it made? In the technology sector. So from an investing perspective, that continues to be where most investors, if you're looking for growth, if you're looking for wealth accumulation, that's the place to orientate and position your investment portfolio for those trends. That's not going to change. That's going to continue. And one thing I will say about Elon, just looking at him as, forget whether you like him or not, he's got some crazy views, and he's definitely an eccentric person. But in terms of just business sense and being an entrepreneur, he's definitely the world's greatest. There's no doubt in terms of what he's done. And one thing I will say is, in terms of how he did it, is rather amazing and impressive. He built his wealth, besides PayPal, he built his wealth in 2 industry sectors that have a high failure rate, which is quite amazing when you think about it. The auto sector with Tesla, and then space or rockets with SpaceX. Both of those sectors have bankrupted so many entrepreneurs and so many investors, and yet Elon chose those 2 sectors as the place where he was going to build his net worth and make an impression, and he certainly has. So he's gone against the odds in many sense, and so kudos to him for doing that. And besides being a great entrepreneur, he's also a kamikaze, an absolute kamikaze. He almost went bankrupt at least 1 or 2 times. So you have to be crazy. You have to be a kamikaze sometimes to see your vision through, and he has certainly done that. Now, in terms of final reminders, there's lots of financial icebergs out there. You've got inflation, you've got taxes, you've got market crashes, accidents. These are all the things that could derail your investment planning, your portfolio. And so this is why it's so crucial in terms of, again, getting back to building an architecturally sound investment portfolio. The 3 cornerstones are core, non-core, and then your safety bucket. Your safety bucket is what keeps you grounded. It performs differently than your core and non-core portfolio. It protects your principal and makes sure that your investments are safe and growing, and adds also some liquidity. Keep in mind that ETF Guide, besides YouTube, is available on all these other platforms. We've got Roku, Apple TV, along with Fire. And we also simulcast our original series programs like ETF Battles, First Look ETF, and Metals in Motion on Spotify, as well as iTunes. Those are both major podcasting platforms. And finally, watch for our upcoming episodes of First Look ETF. We just published our June episode. If you missed it, be sure to catch it. And then we've got Metals in Motion, an upcoming episode all about uranium. So be sure to check that out. And hit me up in the comment section below. Let me know how you're doing. Great to see you again. I'm Ron DeLegge with ETF Guide, and we'll see you on the next episode.